Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Sam Hudson of Corn Belt Marketing. Well, we have just about everything higher except for the cattle complex this morning, Sam. And the grains, let's start off there because it looks like a little bit of a relief rally as Argentina has put their export tax back on. Is that what's kind of driving it?
I think that's probably the biggest thing. Now, we're not going to get back everything we lost last week, particularly in the soybean market. I think when you see weekly export figures, it probably underscores those ideas. We continue to see great movement in corn. In fact, we're about 5% ahead of those export estimates that seem rather large to begin with. But when you compare that to soybeans, 19% drag compared to the current USD estimate. So if we don't fix anything here on trade in the short term, especially as we expand harvest, then you're going to continue to see those numbers get worse and a bigger expectation that we'll see them cut on subsequent reports.
Yeah, no doubt. And of course, this Argentinian news kind of added insult to injury, but let's talk about that because Argentina putting their tax back on, what they say that they've raised, the $7 billion that they wanted to with the program. So that's why they're lifting it.
Yeah, I mean, it makes you wonder if you get thrown back into kind of a hoarding situation. And we have to keep in mind, too, we don't want to take our eye off the ball on total global demand, particularly into China, which we've continued to see record purchases actually year over year. And so that global displacement of soybeans is still taking place. But the silo of storage in the U.S. has just gotten larger at this point. So just like we saw during COVID and some of these other geopolitical situations, you see, kind of a redistribution of some of these supply lines, but that takes a long time to take place. And unfortunately, we're going to be the loser on the front end of that. Yeah.
And unfortunately, in the meantime, Argentina sold maybe upwards of 35 cargoes to China.
That's the rumor, 20 to 30 plus. And so I guess we'll see how that filters into, the scheduling for the U.S., campaign, as we get closer into the November and get to the backside of harvest. We're starting to see, forecasts that offer, an opportunity here to get a lot of soybeans harvested, I think, over the next week or so. And that's going to continue to apply pressure, I think, in some of these cash markets where they don't have any of that definition.
Yeah. Sam, do you think Argentina really met their $7 billion goal to put their tax back on as far as revenue, or was this because the U.S. said, hey, we'll give you $20 billion in a swap if you put that back on?
Well, it gets a little easier to make that claim, doesn't it? So I don't know if they have or haven't. I don't know if you can even take any of that information. I think you have to take that information with a grain of salt, I guess I should say. If we walk back any of these funding, commitments, then it could get thrown right back on again. So this is kind of the beginning of trying to figure out, this tit for tat, trade situation. And obviously it's gotten a lot more interest in Washington. There's a lot more pressure from some of these trade lobbies and groups to provide aid. When it's all said and done, I'm not so sure we couldn't end up with both before we see an ending on this situation.
Yeah, and they're even talking about maybe a government shutdown here again, aren't they?
Absolutely, and you have to consider what that would mean for our USDA reports, especially when there's so many expectations on yields and so forth here as we get deeper into harvest.
We certainly don't need that. Meanwhile, export sales, you kind of mentioned it to start off with, are on new crop soybeans, trailing behind last year, and we have had no business to China so far. China kind of sent a signal this week here buying Argentina beans. They don't want our beans. Is that right?
Yeah, I think so. I mean, at least that's what they're signaling now. I mean, ultimately, again, I would go back to the fact that we could see some of these supply lines change. Argentina crushes 2/3 or more of their soybeans, and so they could end up buying beans from Brazil or from us down the road here. But as it sits today, again, we're the loser on that front end. And so we have to see something change here. Best case scenario, you get some sort of a kicking of the can down the road or some sort of token here before these, port deadlines start to take place at the end of the month. Worst case scenario, we see, soybean markets implode under the $10 mark because from a technical standpoint, the consolidation we've seen over the better part of the last year, you have to respect some of those lines and technicals on the chart. Under 990 or above 1070 is basically what we're trading here, and I don't see anything changing on that until the storyline gets confirmed.
Okay. Well, I thought it was a victory this week. We held the $10 level, but you're saying you don't think that is necessarily going to hold here.
If we continue to see these deadlines pass and no trade at all, we mentioned, I think you're 19% behind based on the current pace right now. Every week that goes by, that number is going to get continually worse. And for the next WASDs that we have upcoming, we're only going to continue to look at those numbers cut or see the possibility of it. On top of that, I don't see quite the strong opinion on soybean yields potentially being cut compared to corn because of the disease pressure. I think that crop is just in better hands right now.
Yeah, and we'd have to cut quite a few bushels here to offset this China demand that we're losing. All right, what about corn yields? What are you hearing there, Sam?
All kinds of variability. We have yields around here locally, well taken care of, sprayed twice, fungicided twice. You're going to see yields very close to last year, maybe even a few that are even a little bit better, but they're not beating the pants off it. And unfortunately, when you look at some of these areas that weren't treated, or even some of the fields that were, we're seeing yield drags anywhere from 10 to 50 bushel. We've got a yield range, of about a 175 to 275 around here, generally speaking. We got corn coming in at 14%. That's usually not a good sign. And stuff that's still 24 to 27%. So it's just all over the board. I think that ties back to, the fact that it's just hard to hold averages when you get numbers like that. And it's relatively widespread.
Yeah. And while yield is coming down, you have very strong export activity. This morning, I think our total now is over 1.1 billion that we've sold for new crop exports so far. So we're well on the way to that record target USDA set, right?
That's right. And we actually beat the highest trade guess. We're over 75 million for the week. We've seen more flash sales to Mexico. The only, thing you have to worry about there is the sales to Mexico are almost getting so big. You almost have to wonder if those could be canceled at some point down the road. But, this gets us into this conundrum where, if we see a little bit of a levitation in corn price still as we set some of these insurance levels, if we get up into the 4.25, 440 or 450 range again, if that's possible, and then we have to cut these yields on top, you just wonder what could be possible, from a pricing standpoint after the first of the year by the time we get to January, assuming we have the government open.
Yeah, we've been hitting some of those key moving averages. We've got a gap area up at 432 3/4. We've been unable to take out in corn. So is that what gets us over that mark? These yield reports keep coming in lower, or what does it take?
Yeah, it's a combination of a few things. I think one is going to be, there's been a lot of talk about how farmers don't have a lot sold. I would agree with that, but that also means the end user doesn't have a lot of coverage. And so when you're an ethanol plant, and someone who has something that you've got to back, you got to find that ownership at some point. And if they can't get it right now, if they realize or get a hint that these local yields aren't as good as what they thought and they can't get corn bought, they'll start buying futures to at least get that coverage and try to, find the over on bushels as they come in. Because remember, it's still going to be 16 plus billion. It's just coming off of what we thought it might be of 16.8 or even 17 billion. And so after harvest is done, Michelle, I really expect that you're going to see a snapback in some of these basis levels because farmers are only going to sell what they have to unless you can get them a better price. Yeah,
for sure. What about the wheat market? We're following corn and soybeans, it looks like this morning, but that market just feels stuck.
Yeah, it's just hard to watch, honestly. We were talking even before we went on here. Technically, this morning it almost looks good, but if we finish unchanged, it'll look bad again. So there's just not a whole heck of a lot to talk about. You still have funds that are short, but it just seems like even a headline they don't even care about anymore. So we're going to need to see some bigger proof of bigger demand or a lack of acres or something. And that's about the only thing to talk about this time of year as we conclude corn and soybean harvest, where we're going to see, the flux of wheat acres and really the drive to plant anything at this point moving forward.
Absolutely. I don't feel like any of the grains right now are at prices that are incentivizing anybody to plant anything.
Nope. That's exactly right. And I think that'll filter into those selling decisions. Guys will hold on as long as they can. And hopefully that equates to some pricing opportunities at some point. But the way we allow this, I guess, Michelle, is if we continue to see that impasse on Chinese trade, we can pinch our corn stocks if there's a chance we can plant 100+ million acres of it next year.
For sure. Okay, cattle market. We are down this morning. We've seen some consolidation the last couple of days after that big run up Monday on the New World Screwworm news. But is this just profit taking, do you think, or is there something else that's pushing the market lower?
I think initially, we've had so many vacuums and so much volatility and craziness in this market. The weakness of $2 to $3 lower here in the feeder cattle. If you can find some traction before midday, then I could say we could define it as just what you mentioned. If we start to slip underneath some of those levels and close really poorly and finish the week the same way, then I think it's something else in the mix. But obviously, the border control is going to remain a big point for this market here as we get into the end of the year in those headlines. And the trade with Brazil. We talked about it before we came on air as well. If we can unroll some of these other issues, the screw room isn't the only problem. It's just amplified what we already had on the table.
Yeah, for sure. So you got to get some risk management in place in case we do have a correction here. There's also talk about this herd rebuilding program, maybe as another excuse for cattle being down, but near term, that should be positive, shouldn't it?
You would think so. If you're taking even more supplies away and forcing people and paying people literally to do it, then you have to assume that. But I really think that heifer retention is already taking place. It's hard to put your finger on that all the time, but cheap corn and more available grass in general, I think helps continue to facilitate this. But the thing we're always fighting along the way is some of these older producers getting out of the business and making sure we keep people doing what we need them to do.
Yeah. And finally, the hogs back up today. We're into these contract high areas. If we don't get anything bearish in the hogs and pigs report this afternoon, do funds just keep buying here?
Well, I think you have to keep that tilt to the market as long as beef prices look the way they do, and again, if we see things start to, capitulate lower there in the beef complex in general, then I think that's probably the biggest risk for hogs. If that doesn't take place, then it's just your week to week technical look. And what I look at here after the last couple sessions is a pretty big reversal on the chart. So we're going to need to do some work or see some positive fundamental activity to retake that.
All right. Thanks so much. That is Sam Hudson with Corn Belt Marketing and Markets Now.
You were right.
You were right.
You were right.
Well, you were right.
When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.